Good morning to all traders and welcome to this Tuesday's Market Insights video on FX majors. They're going to look at Euro, Dollar, Dollar, Yen as well as the QE. Yesterday at National Convention, former First Lady Michelle Obama pronounced Donald Trump unfit. Now at the same time, Ms. Pelosi, she called the House back into session for a vote expected on Saturday on legislation that she wants to impose to prohibit changes in the US Postal Services. There's been growing concerns lately because the US elections are supposed to be, they were suggested actually to happen via the post, the election, the voting. But the CEO went out saying that, well, it's not going to be very possible for the votes to be delivered in time because they won't be able to count them in time. So you see now there is a lot of acidity around this subject, and we can expect further developments to move the market, specifically the equities markets, as well as the dollar. Now, dollar was weak yesterday on economic data as well, okay? And of course, as US standards restrictions on suppliers to Hawaii, supposed to have some sort of effect on equities and risk assets as well. However, dollar was again the one that was pushed down. The events in the US pretty much weighed on the dollar more than the events that are related to the trade war. For that reason, we saw only QE being affected negatively against the dollar, but that was due to dovish RBNZ, as well as because that the New Zealand decided to postpone their election. Now, for the short and medium term, I want to start with the euro dollar. If we look a little bit further back, we're looking at this as a W, X, and Y, right? And this will be part of wave X in the cycle degree. We've had this ABC wave ends in here, right, for wave X, and then wave 1, wave 2 with a triple zigzag, 3, 4, and 5. Now, as you can see, wave 2 is, it lasted way longer than wave 4. Despite that, wave 4 looks to be a very nice flat, a simple flat. Now, that means we are expecting wave 5 to come in. This is 1, 2, we're going to extend the 3, 4, and 5. Pulling different Fibonacci extension levels from wave 3, intermediate, wave 3, minor, up to 5. We get a very good confluence level around 121, 121.60, okay? And this is the level that we'll be looking to for wave 5 to end. Now, wave 5, of course, could end anywhere above the 119.14. However, since we've crossed above on the zero lines, as well as momentum is both the signal lines and the EMA are above the zero line as well on the MACD, I'm not going to be looking for sales until those cross back below, right? So until then, I'm going to be bullish, and I'm looking at the 121 at least to be a level where I will start looking at signals, bearish signals a little bit closer. On dollar yen, I'm looking at this also as part of wave X in the cycle degree. However, here we are in a W, X, and Y pattern, and this Y primary move, okay, is a W, X, Y, X, and Z triple zigzag, right? Now, we've done, or it looks like at least we've done wave X down here, and I'm expecting an ABC, this is ABC, and then another ABC, and we're going to see another ABC break into fresh highs for Q3 at least. I'm expecting this to be above this channel, okay, because I do see this as a corrective move, although it's part of a correction anyway. It's because I'm expecting wave Z to actually cross above the 111 to make this wave X valid, right? Otherwise, we are going to have to start looking for a different alternative scenario. But before we go there, don't forget that we also we missed this channel, right? So I wouldn't be surprised if we see this becoming a W, X, and Y, right, which means wave X would be down here in the intermediate degree, only just because we missed revisiting the bottom channel trend line over here around 103.44, right? Or, as I said, the alternative would be that we've ended W down here. This is a complete different pattern, and this is wave 1, right? W, X, and Y for wave 2, and this is like 1, 2, 3, 4, 5, ABC, and we're going to move higher for wave 3, 3, 4, 5 as well, which is going to be minor 3, then 4 and 5, and we should be looking for prices to achieve fresh highs in the minor degree, of course, and then in the intermediate, okay? And last, let's have a quick look on Kiwi. On Kiwi, we talked about this nearing its end, okay? So we've got 1, 2, 3, 4, and 5. At least I see this as a 5. This for me is an impulsive move to the upside, okay, which is part of a simple zigzag. So I'm waiting for an ABC in wave B, and then another 5-wave impulse to the upside for wave C, okay? That is going to be, of course, part of wave 4 in the cycle degree. Now, I do see this as a move to the downside, right? So this is wave 1, 2, multi-structural wave 3, 1, 2, 3, 4, and 5, which is going to be 3, then again 4 and 5, and perhaps wave A, then B, and then C, okay? So wave C can go to 0.59 or anywhere between 63 and 59. Well, ideally, we would want to go to around 160, 168, okay? And I believe we are going to get that level one way or another. The other scenario, however, would be that this is wave 1 and 2, and since wave 1 is a leading diagonal, we're looking at wave 3 being that move rather than this, okay? So that means we are 1, 2, 3, 4, and 5. That's intermediate 3. That's going to be intermediate 4 because it could be corrective or a multi-structural move to the downside, right? So it could be an A, B, and a C, and this move to the downside could be an ended diagonal, as you can see. And from there, once we do a double top down at 63, 64 or so, then we can be looking for prices to move up higher again for wave 5, right? That would be the alternative scenario, of course. So I will be looking for further signs on these of validation for the alternative scenario around the 63.87 level, 64